Watch this video as soon as possible. With Ethereum coming down, Bitcoin having a slight crash, there is some concern about the broader market as well. Tesla's right-hand man, it turns out, has dumped 80% of his Tesla stock. Now, there's some optimism as well. Nvidia still is near all-time highs, Palantir holding up as well, and Robinhood looking like it could go to all-time highs again after an incredible run. But it's not just these popular retail names. There's little-known retail names that I'm going to tell you right now, the tickers. If you stay to the end of this video, I'll show you the price levels and the fundamental reasons why I believe these stocks are good picks. But the tickers are right below. It's OpenDoor, similar to a Zillow. It's also AppLovin. It's similar to a PubMatic or a Meta, really. It's a digital advertising. And the third one is SEDG, a solar stock, SEDG. So think, look at the solar ETF for those, and we're going to have to talk about rate cuts for SolarEdge. But hit that subscribe button right below or right over here if you're on mobile. Looks like this. Let's hit that 600 subscriber goal, and let's get into this first stock. Now, I would say that this is not to be confused with OpenAI, first off. And I'm just saying that because OpenAI is going to go public, probably at a $400 billion valuation. It's going to change the landscape of a lot of these new AI plays, these tech stocks. But we're talking about Open in the real estate management space. So, similar to Zillow, they had this earnings where they sold off, but they're holding well and basing above this level, which is the technical reason for it going to, keep going up. This wick on Friday is slightly concerning, but it did hold this level. So that's the level. Technically, we'll jump into the news in a second. Whole dollar number, 310. You can risk off of if you want to risk, 20 cents to make, a dollar more. That's why we're looking at Open in the first place, the risk reward. But the revenue was good, over $1 billion, $1.5 billion, and first positive adjusted EBITDA since 2022, which, that's one of the worst years for all stocks, but OpenDoor in particular had a very poor 2022. So the fact that it's turning up now, are we going to see a turn up like UNH, the Buffett buy, or like Intel, the possible government stake that just had significant volume past week? I don't know. This is a much more out of the news, off the radar play, but it's a tech play. So there's definitely a lot of eyes on this ticker, which you want. There's plenty of volume. Just about, I don't know, what is this? A couple million and a half per day. Now, typically you want to be able to enter and exit about 10% of a volume candle. So if you have anything less than, this is $1 million per 1 minute, and you have $100,000 you want to put in. You can put it in a single minute, and you shouldn't disrupt the stock price too much. That's about the liquidity threshold for this stock. If you're comfortable getting in over the course of 10 minutes or half an hour or so, you could put $1 million, or I would hesitate to put any more than that in this stock. So that's the risk profile for that. The other two stocks are higher portfolio plays, but I did want to include a lower portfolio play because people are looking for more aggressive strategies, stocks that move more violently and volatile stocks. And of course, that comes with illiquidity. So that's all the fundamentals on Open. The technicals, the fundamentals are less important, of course, because it's a small cap stock, but basically they need to be profitable on an adjusted basis. So could this turn slightly red at Open? It could. Is this level really important? It is 310. And as far as long-term Q3, well, they had 4,500 homes on the platform, and housing is going to be helped by rate cuts. Home builders are already turning up. Stocks like LEN or nail. So that's what we want to take a look at, this home builders ETF. If this turns up, OpenDoor is also going to see a similar move, and it is a sympathy play to Zillow. We also want to look at OpenDoor. So there's a lot of reasons to look at this stock that are more fundamental, but the technicals are just so important given that it is such a liquid stock. That's all I can really say about microcap like that. AppLovin, strong earnings and pulled back, a little bit of an undercut. It could rally off of this 10-day moving average off of this left side peak. So this is a pretty clear level to buy off with an excellent risk reward. What do? Well, they do ad impressions online and your phone. The little banner ads. You might not play games, the banner ads, I promise you, billions of people do. They had over $1 billion revenue, 2.4 earnings per share, over $1 adjusted EBITDA, and they raised Q3 guidance. So they did close a sale of the first-party games business to Triple Dot. What does first-party games mean? I'm not really sure, and I also don't think it really matters. But the point is they got cash and 20% equity. So it seems to be this earnings reaction is favorable, and you don't have to know exactly what the M&A details. You don't have to be an M&A instructor, investor, consultant. I'm certainly not instructing anything regarding M&A. All I do and what I expect most people do watching this channel is look for clean risk levels that you can risk $1 or $2 or whatever a share and make 5 times that and be wrong 3 times and you make money. So that's kind of what this channel is all about, investing medium to long term. There are long-term plays like I've talked about that are extremely bottomed, but just because someone else is buying United Healthcare down here, who may have $50 billion, talking about Warren Buffett, to put into stocks like this, it doesn't mean that it's going to be the safest and most needle-moving move for your portfolio. And app is a nice balance between safe and needle-moving, whereas open is a little more speculative. So they are scaling behind mobile into a web, and that's obviously a huge market. To think that they don't even have web advertising as part of their business yet is incredible, given mobile came after. But if there are dips and it continues to hold this level, I think this could be a good buy. Now, let's go into SolarEdge. Solar as a whole, a TAN ETF, has kind of been lackluster until just on Friday, really. There was also, across the board, and phase had a little day, but FSLR had a really solid day. Oh God, what did I just do? All right. Little blue screen of death situation there. The point is, Sedge looks like it's turning up. I'm turning into a Windows user very slowly after a decade on Macs. And I think that this earnings actually reaction, even though it sold off so heavily, which has been the MO in this earnings season, is okay, given that it did hold. So, it's nothing like a TDD where it sold off on earnings and then just basically cratered. Nothing like a Netflix. A lot of these stocks just went down, 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 and didn't turn up. So if you've seen Roblox on Thursday and Friday, that is a good example of what can happen when an earnings reaction sells off. And I actually shorted that. But in terms of SolarEdge, I think the most important level is got to be this 32 level. If we zoom out, we can see that that does coincide with these 2 left side peaks. And on a intradaily basis, it does seem like it's not the cleanest moving stock. I mean, these are pretty rough wicks, but it is above the 200-day moving average. And if it can go sideways and remain above this earnings sell-off and use that as support, this could be a big move into blue skies above 34. So maybe it'll go sideways for Monday, Tuesday, but I want to make sure you have it on your radar now. It's just in case it does start to move up and accumulate volume. So you can see this volume is insane right here. It's double the earnings reaction volume, and the earnings reaction volume tends to be the most significant volume by far. I mean, if we look at Netflix earnings reaction volume, look at that compared to the rest of the volume bars. So that's SEDGE. Again, the rate cut could be positive for people financing solar. Now, if rates go up, that could be a real killer. So we do want to be aware of that macro factor. So those are the three stocks. I think OpenDoor is the most speculative by far. I know people are excited because of this hold right here and the volume here. Just because this is on a lot of retail day traders names list doesn't mean that it's for you. So manage your own risk with that one, even if it has attracting a lot of buzz online. AppLovin, this undercut rally is just really beautiful off this left side peak in terms of technicals. It gives you a low opportunity, low risk, high reward opportunity. And basically that manifests as useful to you math-wise because look, it showed you it can go up significantly, right? It went up 25% in just a few days here. And then it, paused and breathed a little bit, giving you an opportunity to get in off of a support resistance pivot line where there are buyers, bag holders, whatever you want to call it here. So if they don't sell, it means they like the stock, and that means the stock's going to go up because there's going to be people like us getting in and no one selling. So that's pretty much the mechanics of why that's a good play. And then SEDGE with the rate cut likely in September, this is interesting. The move on Friday was pretty significant, and it's the Treasury Department. Energy tax credits are huge for solar, so I would expect this to continue running. I would still say you need to watch this peak to make sure it can hold that level. And as always, solar has been a little bit rough looking at the ETF, but there are a lot of names in solar and energy that, even if they've been kind of lackluster for 6 months, if there is some continued interest in the sector, we're going to see more moves like FSLR. And I would say that SEDGE is probably one that has the most opportunity in terms of a clear risk level in the solar category. So look, if you want to see this channel grow, if you want more stock ideas, click that subscribe button and let's get this to 600 subscribers. I think that would be super helpful to have new people discover it. Boosted in the YouTube algorithm. As far as taking a look at your portfolio, there's a link down below to selfadvisors.com. We can jump on a call and talk about what your portfolio is looking like. Any questions you have, I will pitch you something at the end, but I think it's more than worth the money and it's a quick pitch. And lastly, there is a partnership I'm running with a day trader. This isn't just any day trader. This is, he's ranked number 3 in the world on this public leaderboard, and you can see the leaderboard right here. So he's made $9 million, and I'm actually going to log into his broker right now so you can verify what I'm saying and also get a glimpse of the free training he's offering at AikaidoTradingMethod.com. You guys are awesome, and let's turn to Adam and a $9 million day trading strategy. Thanks for checking out this free training. I'm here with the lead sensei of the Aikido trading method, Adam Geford. I'm just going to log into his broker very quickly so you can see that his results are real. This is his Guardian broker. He does have more brokers than this, but you can see that he's made about $4 million net.
Yeah, Guardian's been a good broker for me. And in this quick video, I'm gonna show the viewer how to trade. Show him a little taste of the Aikido trading method. Method that I've So let's start with the times to trade. The best times I think to trade are on the pre-market and after hours. The stocks move differently than market hours because there's less traders at that time, and also you can do it, in those hours, and it won't disrupt a day job or it won't disrupt things that you might want to do during the day. And let's take a look at some of the trades I actually did today here. I'll share my screen. So these are some of my brokers here. They're all brokers that where you can short microcap stocks below 50 million market cap, nano cap, and microcap. And here's a trade I did today. This is KTTA. So I made about close to $30,000 on this broker with this one. And I started out in the pre-market after the news hit at around 7 a.m. I shorted it, then I covered.
And if someone's interested in learning more, how can they reach out?
They can go to Aikidotradingmethod.com and click on the free training, and there's some links on there where you can go and then you enter your name and email address, and that actually goes to this video right here. What we'll do is we'll email you and tell you the next steps to learn more about the Aikido trading method.